Hello everyone, welcome back to my channel Stock with Khan. I'm excited to share some information regarding the dividend stock, particularly knowing that the stock market has been red in the last couple of weeks. Every single stock is going down, and in such crisis moments with the stock market, you always want to look at your portfolio having or possessing stocks that do not show so much volatility, and that stability, so to say, you only get or obtain with certain stocks which has a reliable market cap and also provides dividend as well as has the potential to grow in stock price as well. And in this aspect, I'm going to talk about some of the dividend stocks that I believe has the potential to even grow, but at the same time, even if the stock market is red and the stock value goes down, its dividend yield is going to go up. So that's the good thing you get with the dividend stocks, that if the stock market being red, and if stock values goes down, its dividend yield goes high. As its value goes high and the stocks turn green, the dividend yield goes down. But if you look at the stability of the company, so in each aspect, you are not like losing money, you are always in the positive. So in this regard, I was thinking that I must share these things with you to keep your portfolio in a stable position and not looking at your portfolio being always red. So let's get right into it. The first stock I want to talk about is AbbVie. It's a pharmaceutical American company. I am really into the companies like AbbVie because they have a very good market cap of, as you can see, 192 billions. AbbVie was one of the companies next to Verizon, which I'm also going to talk about, which was, I would say, AbbVie compared to Verizon was somehow shaken a little bit by the recession, by the pandemic, but Verizon wasn't. But the good thing about AbbVie is that at this point, like in March 23rd and 60, you can look here, March 16, at this point, Verizon was trading at 68, but there was a time where its dividend yield was in the 6-7 range. So that's the thing I'm just talking about right now. You can see from 68 it has gone up slowly and is trading around 108, but the dividend yield is 4.83, so it has come down from that 6.5% range. And that's the beauty, that's the good thing about those stocks which has like you can see the PE ratio is like 40, which indicates that it's a compared to other companies whose PE ratio is above 100. AbbVie has stability in it. Of course, you always have to consider that the PE ratio anytime under 15, in my personal opinion and the analyst's opinion, is considered really good. In the 40s range, it's okay-ish good, yeah. So its market cap is quite good. It had the volatility in it since Corona. But as we know now that vaccine is rolling up, things are starting to open up again. I think this stock has a growth potential as well as it has the stability. So you are not losing money in any way. The other thing that I want to talk about is the analyst point of view on this stock. So if we come down here on Yahoo Finance, you can see the analysts rate it from a scale of 1 to 5, 1 being a strong buy and 5 being a sell. They rate it as a buy, so 2 is a buy. I personally think the same, especially knowing what happened with Corona. We were totally not prepared. Being in the field myself, I can tell you that pharmaceutical companies are going to do really, really well. So I personally believe this stock has a huge potential. But again, I'm not your financial advisor. You should always do your own research. I'm just going to give you the advice that if I would be in your shoes with spare money in hand, I would definitely put it in a stock like AbbVie. My second stock that I would like to consider is, just like I mentioned before, is tech stock Verizon, communication technology. Verizon is one of the stock that wasn't so much shaken by the pandemic. So if you look here in the March 23rd, it was trading in the 50s range as well. It was trading 51. Right now it's trading at 55. So there was no such dramatic drop in this stock. That's the beauty of this stock. Its dividend yield is 4.54%. Very good for a stock which is in the 50s range. Of course, it has slight growth potential as well if you are a long-term investor in a stock like that. But the great thing about Verizon is that PE ratio is 12.91. That is so good for a company with a market cap of 229 that you can never be afraid that in red days like current stock market. Of course, today the day is green. That's a good thing. But in the current day, like in the stock market, which is totally red, in the last 2 weeks, it's been totally red. If you look at Verizon, it hasn't dropped so much. So every other stock, if you look at it, it has dropped between 20 to 40%. Verizon, in the last 2 weeks, if you look at it, so I'm looking at it since January 25th, it was 54, and right now it's trading at 55. It tells you that this stock is very stable. I would for sure recommend this stock. If you look at the analyst point of view on this stock, the analyst rate is 2.7 as a hold, so I would consider that at this point as a buy if you are thinking that the stock market is in a bubble and it still needs correction and you need some money to get from your shares from your stock. I would consider to buy this stock and just keep it just for the dividend yield quarterly. My third stock is again a tech giant. I would say one of the best stocks that I would consider for dividend is Apple. Apple has very strong fundamentals. Its market cap is in trillions, as you can see, with an okay to good PE ratio 334. But with Apple, 34 I would say is really good because it has such an amazing fundamentals. It has so much money. They have like right now they are the leaders in tech company. Of course, they have been not giving the dividend. They recently started providing dividends, especially this you get with companies who are growing so fast with early Apple and iPod that they came up with. Apple recently also talked about coming up with iCar, so they are also going to the EV car development, and they're looking and searching for merging with a car company. At that point, of course, we don't know which company they're going to merge with, but if they do come up with Apple iCar, Apple has a huge growth potential as well. So for sure, I'm not afraid that this company is gonna drop from where it is right now, 125. For sure, there is a great growth potential in this company. Again, do your own research and then consider the company, but I will for sure recommend this. Let's get into the analyst point of view. You can see from a scale of 1 to 5, they all consider it as a buy. 2 is a good buy. So my point of view will be the same. I would also for sure, having spare money, I will put it in Apple. My last stock that I want to consider, I have two stocks actually that I can put my money in. One is AT&T, again another tech company. Let's see if it pops up in Yahoo Finance. Yeah, here AT&T. AT&T is well known among other YouTubers as well. They have very good market cap and their dividend yield is 7.27. Shows you that, by the way, I forgot to mention that, but it's important that whenever the dividend yield is higher than 4 to 5%, you should always be slightly afraid that the company is in a loss and that it's going towards the debt. Yes, so be wary with companies like that which are giving more dividend because they are trying to engage their customers as they are trying to, whatever money they have, to give it to their shareholders. But AT&T is popular, known as a good dividend providing company. Its 52 weeks high has been 38, which indicate it also has a growth potential. I personally think, I have not checked it, but I personally think that it's yeah, that's what I was thinking, that it's a hold from a scale of 1 to 5. So I'm thinking myself to put AT&T into my portfolio as for dividend yield. And that because I have done my own research recently. I was reading about it and I found that this company has been providing the dividend for 35 years. So it tells you that there is certainty with this company. So if you are looking for a good dividend company with slight growth potential, but at the same time also you have to be wary that this company is providing, compared to other companies, more dividend, it has also potential to go down. So if you ask me if this is a good dividend company, I myself would put money in that, but you should do your own research. And the last company that I want to talk about is IBM. I'm going to briefly go through IBM as well because they are also giving very good dividend. They are providing 5.48% of dividend, and they have a very good market cap as well. Beside that, their 52 weeks high range is 136, indicating that they have also growth potential as well. If you look at the analyst point of view on IBM, it is 2.6, so it's almost close to hold. So if you already have it in your portfolio, very good. I think you are lucky you are getting good dividend yield from a company which has very good stability in such market where everything is going red every single day, and we don't know how long this is going to proceed. We are lucky that we are seeing a green day, but the analysts have been talking that this bubble might take some time, and I think of course it will take a V route. It will bounce back very quickly. This correction was needed for companies which were especially in the EV market. So I personally think that with companies like IBM, you get that stability where you are not afraid that it's going to go so down, because it is such a renowned company, but at the same time this company has very good fundamentals as well, with the PE ratio of 19, just above 15. So I would say the PE ratio is very good. It has very good strong fundamentals, and I will consider this as a dividend stock as well if I have spare money in hand. So these were my top 5 stocks that I wanted to recommend today for your dividend portfolio. I'm excited to see you in the next video, but I would request you to please subscribe to my channel and help me support this channel. I will see you in the next video.